Hello and welcome to QuanX News. I'm Prasann Koli, here to bring you the latest stories about India's financial world. This podcast is sponsored by QuanX Solutions, your partner in smart tech solutions. Don't forget, QuanX News is available on all platforms. Let's get started. Today's update focuses on the trade setup for December 11th, where the Nifty 50 stayed under pressure for the third straight session, slipping about 0.33% as selling continued across sectors. The index remained below short-term moving averages, and momentum indicators weakened further. This reflects increased caution in the market, especially ahead of the U.S. Federal Reserve's policy outcome, where the central bank cut rates by 25 basis points. Even with this weakness, Nifty managed to defend the 50-day EMA near 25,700, which has now become the most crucial support. Experts warn that if Nifty falls below this level and sustains there, the index could slide toward 25,500, a key support zone. On the upside, any rebound is likely to face resistance around 25,950 to 26,000, making this the immediate hurdle for the bulls. Technically, a bearish candle with an upper shadow formed on the daily chart, showing sell-on-rise behavior. Weakness in the RSI, MACD, and stochastic RSI further confirms sustained bearish sentiment. Bank Nifty also showed weakness, falling below 59,000 for the first time since late November. It formed a bearish candle and slipped under short-term moving averages, signaling growing pressure in financial stocks. The index also closed below the midline of the Bollinger Bands, ending a long period of strength. Indicators such as the declining RSI and weakening MACD histogram suggest continued downside risk. On the options front, the highest call open interest for Nifty is at the 26,000 strike, making it a strong resistance in the short term. Heavy call writing at 26,000, 25,900, and 26,100 reflects that traders expect rallies to be capped. Meanwhile, maximum put open interest is at 25,500, reinforcing it as the most important support for the coming sessions. The put-call ratio fell to 0.73, signaling a shift toward bearish sentiment. The India VIX stayed low near 10.9, giving comfort to bulls, but such low volatility can also lead to sudden sharp moves. Derivatives data showed long unwinding in 63 stocks, short buildup in 96 stocks, and limited long buildup, all pointing toward a cautious corrective phase. Delivery-based buying continued in selected counters, and the FNO ban list remained unchanged with Bandhan Bank and Saman Capital still restricted. That's all for today on QuanX News. We talked about market pressure, key support and resistance zones, options data, and sector signals ahead of the December 11th session. Thanks to QuanX Solutions for sponsoring this podcast. Stay curious, stay informed, and see you next time.